Hi, this is PR Sundar. Welcome to this special episode. I'm going to share one strategy for the coming week. And you all know the next week the result season begins. On 11th of April, the TCS will be coming out with results. On 13th of April, Infosys will be coming out with results. So the result season always start with IT companies. And also in US market also, there are 5 big banks will be declaring the results next week. So the result season will decide the course of the market next week. So maybe I thought, can I make one simple strategy in TCS so that we can make some money. Before going to the strategy, let us look at the chart, and this is the daily chart of TCS for the last few months. So you can see sometimes in the month of January, the high went to 4,000, and that 4,000 was because, that time the market was very, very high, I think 18,300, something like that. Then on top of which they have announced a buyback of shares at 4,500. Then after that the weakness came. So even after the result it has fallen so much actually. So after the results were good and they did the buyback at 4,500. Still the markets fell. But then after that it was consolidating. Then came this Russia-Ukraine war on 24th of February. So that is when there was a huge gap down, and market fell in 4 days. The market fell from around 3,800 to 3,400. If you see here, 3,400 is the lowest point it went. So if you see for the last few months, 4,000 is the highest point and 3,400 is the lowest point. The TCS has been trading between 3,400 and 4,000. So that is one thing. Second thing, few weeks before, the Accenture in US declared a very good results, and usually when Accenture declares a good result, and TCS and Infosys are also likely to declare good results because they are into the same business. So this time also people are expecting good results from TCS and Infosys. Anyway, IT people, even during the pandemic they can do work from home and they can still make money. So it's always they are in a better position. And also because of the last few days correction and some profit booking, and the TCS has actually come down from around 3,800 to 3,650. So in the last 4-5 days, the market has come down significantly. My expectation is that TCS is likely to move higher after the results, but not too much high, because the overall market sentiment, because of the Russian-Ukraine war and then US Fed event, so the markets are really not looking really very bullish. So then what strategy I can do? I thought, so maybe I can show you the strategy. TCS and options, what I'm going to do, I'm going to buy 3,600 call option. So I'm going to buy 3,600 call option I'm going to buy, but I will make money only if TCS goes above 3,750. But now it is only 3,650, about 100 point. After that I will make good profit, but if market comes down, I will make loss. So this is naked call buying, but which I don't do it. After buying 3,600 call options, what I'm going to do, I'm going to sell 3,800 call option and I'm going to sell 3 lots. Now you see the picture change. I buy one 3,600 call option, sell 3,800 call option, 3 times the quantity. This is called call ratio. If the market goes down, you have nothing to worry, you are not going to lose anything. And if market goes higher from 3,600 to 3,900, you are going to make good profit, and your maximum profit will come around 3,800. And few days before it was 3,850 only. From 3,850 only it fell. And if it goes to 3,850, you will make a good profit, but you will lose money if it goes beyond 3,900. Somehow I have a feeling that TCS is going to trade between 3,600 and 3,900. So this strategy makes sense. But however, the margin money you have to pay is about 2 lakh rupees. And what I do, in addition to this ratio, I am going to make some more tweaking. This carries an unlimited risk on the higher side. Although always people say unlimited risk, but you think that TCS is going to go to 5,000? No, it's not going to happen. But anyway, to reduce the margin money, what we can do, we can go and buy one 4,000 call option, 2 lots. So now if you see, your margin money has come down to 82,000. From 2 lakh rupees, margin money has come down to 82,000. And also maximum loss on the higher side is restricted. But however, if the market falls, there will be some loss. But you get a very good profit around 3,800. If it closes around 3,800, so you are getting about 26,000 rupees profit. For a margin of 82,000, 26,000 is more than 30-40%. Now, market coming down, there will be a loss. So what I want to do, because for the last few months, the lowest TCS went is 3,400. I don't think that, this will go below 3,400. So what I'm going to do, I'm just going to sell 2 lots of 3,400 put option. So now you see, because you are selling the put option, your maximum risk has been reduced. Then once again, the margin increases to 2 lakh. Then after selling 3,400, I'm going to buy 3,200, same number of lots. Now you can see, again the margin money has come down to 1,22,000. So we have done how many lots? So 10 lots we have done, but still the margin money is only 1,22,000. So you know how to create strategies like this. Your margin money will be very, very less. So who said option selling is only for rich people? No. Even people with small capital can do that. If you look at the risk reward, the downside risk is 3,400 and upside risk is 3,900. Because for the last few months, it has been trading between 3,400 to 4,000. And now our range is 3,400 to 3,900. And that 4,000 now it's ruled out because last quarter only they did the buyback. I don't think that they will do any buyback now. And the global cues are bad, as I told you. After this US Fed, Russia problem all come. So I don't think that it can go there. And you will make a very good profit if the market closes around 3,800, 3,750 to 3,850 we can say. So this is a good risk reward. You can see the probability of profit is about 68%. The maximum profit is 30,000. Of course, you are not going to get maximum profit. You will get maximum profit only if it closes at 3,800. That may not be possible. And then maximum loss is 59. So the risk reward is 1:2. And your break even is 3,400 to 3,900 and your estimated margin is about 1,22,000. So now I'm going to show you from my trading terminal how I'm going to execute. I will just execute everything at the market order. There's something called basket order in my trading system. What I'm going to do, I'm going to buy TCS 3,600 call option, 1 lot. 1 lot is 150 quantity. Price, I'm putting a market price. And then 3,800 call option, I'm going to sell 450 quantity, 3 lots, also at the market price. 34,000, the 4,000 call option, again I'm going to buy 2 lots at the market price. Then again 3,400 put option, I'm going to sell 2 lots at the market price. Then I'm going to sell 3,200 put option, buy 2 lots. So you can see 3,600, 1 lot buy, 3,800 call, 3 lot sell, 4,000 call, 2 lot buy, 3,400 put, 2 lot sell, 3,200 put. What we do, all I have to do, place the order. Yes, that's it. The orders all got executed. I can show you here. 3,200, 3,400, 3,600 call buy, 3,800 call sell, 4,000 call, 16 rupees 65 buy, and you can see the net value here. So buy and sell, it's almost the same price. Let us see on Tuesday morning, if it is favorable, I may exit these positions or I may even continue until the end of expiry. So maybe I will give you an update when I close this position. So hope you enjoyed watching this video. Thank you for watching.